Hi, Maha. Welcome, Aarp. Maha Justy. Is that you? How do you pronounce your last name?
Actually, it's pronounced Justy, but that's close enough.
Yeah. Well, welcome, Maha Justy.
Thank
Here
you.
to talk to us about Aarp tax preparation for this year.
Great. Welcome, everybody. I assume more people will join. We'll have questions and answers in the end, but you could always at any time post something in the chat. So let me go and share my screen. Do you see my screen?
Yes, I can see your screen.
Okay. Okay, again, welcome everyone. My name is Maha Justy or Justi, and I am a text preparer volunteer with AARP. Been doing it in the Veteran Memorial Senior Center for over 15 years. Time really flies. And I don't know if any of you have been with us before. If you have, we'll say welcome back. If you're new, we hope to be able to help you this year. So we're back physically. Our goal is, as always, is to deliver high quality tax preparation service at the safest possible way. So it's even more important this year with all the COVID craziness. We're not over it yet, but we are optimistic that we'll be over soon. Okay, so if you were with us last year, we had kind of a various models. We had to kind of adapt to the times. So this year, we pared it down. We have mainly two models. Call it Model 1, which is a modified in-person model. And the way that works is that it's a face-to-face with very limited interface dependent on COVID. So the location is in the senior center. When you actually walk in this big room, there is plexiglass between you and the preparer, and you have to be wearing a mask. We have a very short interview, and then you go outside, we do our prep, and you come back and we do the review together. Again, the interface time is very short. And again, you know, this could change depending on the COVID situation. We follow the county rules. If you haven't scheduled an appointment yet and you want to schedule an appointment, here's the number. We'll post it again, and I think the senior center, if you call them, if you don't know this number, they will let you know. This is a recorded number, so nobody physically answers it. You leave a message, tell us you want your tax return done, and you want an in-person appointment if that's your choice, and one of our appointment staff will call you back and schedule the appointment. We have a second model. It's the virtual model, which is an online model. There is absolutely no physical interface. Everything is done by computers. The preparation is done by our team, the same team that does in person. You must be able to upload document on your computer, scan document if needed, make printouts, and use video calls such as Zoom or Google Meet or something similar. So obviously your computer has to have a camera and so on. Again, it's the same number. And when you call that number, your message should be, I would like to schedule a virtual appointment. And again, somebody will call you, ask you these questions again to confirm your capability, and then we take it from there. Some very important date, we have already started our preparation. February 9th was our first date, and it goes until April 13, which is the last Wednesday before the tax deadline. We only do it on Wednesdays. It's by appointment only. And the appointments they go 8:45, 10:15, 12:45, and 2:15. The reason here there's a 15 minutes when you come in, there's something called an intake, which you have to fill out. So we give you 15 minutes to do that. Then we can get started with the actual prep. What you need to bring this year, usually we ask you to bring the 1 year before. This year, we're asking you to bring both years, the 2020 and the 2019. The reason being is there's some credit that are dependent on your income, and we would look at both years and decide which is better for you. And so basically, if you have been with us before, you just bring the envelopes, both envelopes for both years that we gave you. On top of prior year tax return, you need to bring obviously all your documents for 2021, would include your Social Security statement, your W-2 if you're working, any 1099, which could be IRA distribution, any bank interest, dividend, brokerage statement, anything that's a tax document on it. If you're not sure, if you're in doubt, bring it with you and we will sort it out. Also, in the happy event that you get a refund, bring your bank routing and account number. That could be a check. You don't need to void it. We just need to read the number from the account, or any other way that you have your bank account information. If you expect a refund, there's also possibility if you do owe money that we can arrange for an auto withdrawal instead of actually sending a physical check. It's your choice. What you also need to bring is a letter that you got from the IRS that tells you how much of the economic impact payment, which we call it stimulus, that you received in early 2021. For most people, typically that was around $1,400 per person. If you didn't get that letter, that's okay. Just look at your bank records, and your bank records are around April of 2021 should have that amount. If you are filing joint, it would be double, it would be $2,800 and so on. So please have that number ready when you come in, because we're going to ask you, and we will not be able to do your tax unless we have that number. If you, for any reason, you don't have that number and you cannot find it, let us know ahead of time. Just call us, and we could request an IRS transcript to be sent to your home that you can bring with you. Then we can read off the information from there. The other thing that is also new this year is if you have children, in July, the Department of Treasury starts sending what's called advanced child tax credit. Again, that would be a letter that would say you've got this amount, and you would know if you're getting it because you'll be getting it from July every month for every child you have. And that need to be consolidated in your tax return. And if you are filing joint, sometimes they send a letter to the husband and a letter to the wife with the same amount. It doesn't mean that you get it once. You get basically the sum of the two. So you need to bring both letters so we know how much you got. And then we give you the balance. So a typical example would be at the end of the year, if you have 2 children, you would get $1,500, but the actual credit is $3,000. So we will note down in your tax return, you got $1,500. Then we will put on the tax return that you need the other $1,500. If you have health coverage through Covered California, which is the Affordable Care Act, you have to bring with you a Form 1095A and 3895. We absolutely cannot do your return unless we have these 2 forms. These 2 forms would be issued by Covered California. Sometimes people call that Obamacare, and it's already been issued. So if they haven't mailed it to you, you would find it in your online account. Most of our clients have Social Security, so you don't need to do anything other than tell us, yes, I had Medicare. Or if you're employed, you would just tell us, yes, I have employer coverage. And if there are any gaps, you tell us what the gaps are. That doesn't require any forms. The only thing that requires forms is Covered California. Okay, if you are planning to itemize, please bring 1 sheet of paper that list all your deductions, so we don't go crazy trying to figure it out. All your medical deductions, so if you have Medicare, for example, your Medicare A, Medicare B, the automatic deduction, and maybe prescription drug might be listed on your Social Security, but don't forget other things. You might be paying for a supplement, you might be paying for Kaiser, so you need to make sure you bring that with you, or tell us, write it down. We don't actually need to see the actual document, just write it down. If you have out-of-pocket unreimbursed medical dental expenses, if you have prescription medication, if you have durable medical equipment or glasses or hearing aids, long-term insurance, mortgage, car registration. We actually need the actual car registration because not everything is deductible on that. And last but not least, charitable contribution, cash and non-cash. Okay, a lot of people think they don't need to itemize, and this is the case since the standard deduction is quite high. For a single person is 12,000, for a couple is over 25,000, and it's even higher if you're over 65. So they probably think, oh, I don't itemize. However, we'd like to remind you that the California limit is lower. So sometimes it is useful for you to not itemize in the federal, but itemize in the state. And we encourage you, if you think you're close to these numbers, single in expenses, single or joint, bring it with you, and we can look it in. No harm done. We put the information, and it's only to your benefit. Okay, what happened when you come in? You're expected to file a federal intake file. Basically, it's a kind of a 3-page questionnaire that asks you what's the sources of your income. If you've been with us, you've done it every year. There's an extra California intake, and again, it's a separate sheet of paper that we ask you, did you pay rent? Did you get the economic impact stimulus? Such questions that are very critical to do the California return, because California questions do not show up on the federal return. Unfortunately, they're two different entities. So we need you to fill out that information when you come in. There's also some consent, and there's a lot of confusion about consent. A lot of people just say, oh, let me consent. But we just want to remind you these consent are optional. So the first consent is, it's got divide the consent. And basically what happened there is it allows your information to be saved. What information? Your name, your social security, your birth date, your address. So if you decide you want to come next year to Redwood City, you want to go to San Carlos will be able to pull that information, doesn't have to type it again. So that's the first consent. If you plan to always come to Redwood City, then you don't need to, but it's your decision to consent or not. So that's the first consent. There is absolutely no consequences as far as your tax return is concerned, whether you consent or not. The second one is an AARP consent. Again, this is optional. It allows AARP to use your generic data, this has nothing to do with your name, for grant writing. So, there's a lot of questions that they ask at the end when we do the tax return, like your race, your income, things like that. These are optional questions, but what AARP does with it is they take it and they try to get grant, and they say, okay, see how many people that we, lower income people we're helping, look, give us some more money so we could get, more grant to help more people. So that's the first consent. The second consent is from AARP. It allows AARP to mail you marketing material for potential use for a program. Basically what they do is they look at your income and they say, oh, you can benefit from this particular program. So they would send you mailers. Again, all 3 consents are optional. If you don't want it, just don't sign it. So not signing it, meaning you don't consent. If you sign it, it means you consent. Okay, last but not least, there's self-preparation. Self-preparation has nothing to do with our team in Redwood City. This is basically something that you think you can do on your own, and we just give you hints of where are the resources. So if you decide to do it on your own, there are 3 software options that are basically free for you to do it. The first option is TextLayer. This is the software we are using, but there's a version of it that is a simplified version. And there is no income limit, there's no scope limit. You can go in yourself and fill it out. And there are preparers. When you go on that website, there are special preparers that can answer some questions. This is not our team. This is another team that just generic all over the country that staffs kind of like a call line that would answer your question. Then you can file your return and verify yourself that it's been accepted. The second option is IRS themselves have a website. It's called IRS Free File. This one does have a limit of $73,000 of income limit. You could again prepare and file it yourself, verify it's been done, and the tool is pretty simple if you're kind of computer savvy, some skill. Third is there is printable forms that you can fill out from the IRS. Again, there is no income limit. It's really meant instead of you sitting down like the olden days and filling everything by form, by hand, by paper, this is just electronic. I personally wouldn't recommend it because the tax is too much complicated now to try to do that yourself with these forms. Okay, so for in-person or virtual, and you would like the AARP tax team to call you for any reason, if you're not sure, because we have a scope. We don't have an income limit, but we do have a scope. For example, we would not do rentals. We would not do certain self-employment with employees. You know, that's really above and beyond what we can do. But if you're in doubt and you have a question, just call our line and leave a message and ask either for me, Meha, or Donna to call you back and answer your question. If you don't have any questions, just call and make an appointment if that's what you choose. And please tell them if you want an in-person appointment or a virtual appointment. Okay, that's all I have. And we can open it for questions.
I have a question for a couple that if their spouse passed away the same year, how do you can they still come to you guys?
Absolutely,
Okay.
yes. As long as they don't have a rental and they don't have self-employment, this is something we deal with quite often.
Mm-hmm. And is there a special tax procedure that you guys do for that? You still have to file for the spouse that passed away?
Yes. So what happened is, let's say a spouse passed in 2021.
Mm-hmm.
So the tax return would be done as if the spouse is still alive. So the IRS consider the spouse alive for the whole year. So they still get the complete standard deduction as if they were a couple. Let me just stop sharing here so I can see some of the people. Okay, so we would file it as if the spouse was still alive. That's the first part of it. The second part of it is there are some additional forms that we sign if it's the spouse, that the living spouse is the one that's filing, just to declare I'm the living spouse and I'm, these are the information, and I need to get the refund or whatever to my account. So basically declaring that is the surviving spouse. If it's not the surviving spouse, if it's, let's say, the daughter, it's filing on behalf of her father who passed away and her mother is a bit lost. So in that case, there's a form that says I'm the executor of my parents. And again, we file it as if it's a joint account for the parents, as if they both showed up to do their tax, but they just have the extra form declaring that this person is the executor who will get the refund and distribute appropriately.
Thank you.
We also try to give them some little bit of tax planning, because it's pretty drastic when you go from a standard deduction for a couple versus a single. they would not know that next year the standard deduction will be much lower. And we would like to ask which income will stop and which income will continue, and try to plan appropriately so they have enough withholding. So the next year they don't come with a big tax bill that, you know, would be kind of a nasty surprise. Any more questions?
I think that's it. Well, thank you so much. We're
You're very
appreciative of your
welcome.
help, and it's very informational.
Okay, well, we hope to see some of you in our tax season, and don't be shy if you have any questions. We're happy to to answer any questions. Okay, well, have a nice rest of the afternoon.
Thank you, Maha.
Take care. Bye-bye.